So, let's talk about AI and the future of finance. The whole industry is scrambling to figure out its next move in this AI revolution. We're going to look at three really different, kind of radical plays for survival from a crypto firm, a fintech star, and a Wall Street titan. Okay, let's get into it. You know, if the fintech world dropped a mixtape this week, this would be the title. It is all about AI all the time. Everyone's trying to figure out what to do next. Do you build the new infrastructure? Do you become a totally new kind of company? Or do you just go out and buy the innovation you need? So here's how we're going to break this all down. We're looking at a story in 3 acts: building, becoming, and buying the future. And then we'll wrap it all up with a thought on why maybe, just maybe, the weirdest idea is the one that's going to win. All right, let's kick things off with Act 1. We're talking about building the future. And for this, we're looking at Galaxy Digital and its massive pivot from the crypto game to AI compute. If you were paying attention during the big crypto boom, you definitely know Galaxy Digital. I mean, their whole business model was about riding the insane highs and lows of Bitcoin. Their entire fate was tied to the crypto market. Well, that is changing, and it's changing fast. And this really gets to the heart of their pivot. They are completely shifting gears. They're moving away from mining crypto, chasing those block rewards, and instead, they're chasing the absolutely massive demand for GPUs, the powerful chips you need to train AI. It's like they're pivoting from digital gold to the new digital oil. And listen, this is not some little side hustle for them. They've raised a strategic investment of $460 million to make this happen. This is a massive company-defining bet on a completely new future for themselves. So the big question is, how are they actually pulling this off? Well, they're taking their huge Helios crypto mining campus down in Texas and turning it into a high-performance AI computing hub. They're going after the insane demand for NVIDIA's H100 GPUs, aiming to deliver 133 megawatts of pure compute power. And get this, they've already locked in a huge customer, signing a 15-year lease with the AI cloud provider CoreWeave. I mean, this quote just says it all, right? It perfectly captures the massive cultural and tech leap they're making. The exact same infrastructure, the power lines, the cooling systems that used to sweat over Dogecoin are now going to be powering the future of AI. It's a pretty wild evolution. All right, let's move on to Act 2. We're going from building the infrastructure to a company that's trying to literally become the AI future itself. And for that, we have to talk about Klarna. Okay, this is where the story takes a turn for the bizarre. At a recent all-hands meeting, Klarna's CEO, Sebastian Siemiatkowski, he didn't even show up. Nope. Instead, his AI clone, which was scarily accurate, by the way, delivered the entire presentation. It even called itself the digital version of Sebastian. And according to Klarna, this was no joke. This was a strategic flex, a way to show how they think corporate communication is going to evolve. But let's be real, it was also a massive power move, basically saying, hey, our tech is so good it can replace anyone, even the guy in charge. And make no mistake, this isn't just a theoretical stunt. This strategy has very real consequences. Klarna has already gone all in on automation, famously replacing the equivalent of 700 full-time customer service jobs with AI chatbots. But it hasn't exactly been a smooth ride. The company has actually admitted that in some cases, pushing so hard into AI really hurt their customers' satisfaction scores. They even had to rehire actual humans for some key support roles. So yeah, it's a really tricky balance to strike. So this leaves us with the big question about Klarna's whole approach. They are betting the entire brand on being the most AI-forward fintech out there. Is that a bold vision of the future? Or is it just a bizarre gamble that might end up pushing customers away? All right, on to our final act. We've seen building, we've seen becoming, and now we're going to talk about a much more traditional play, simply buying the future. And this, of course, is where Goldman Sachs comes in. Now, to really get what Goldman is up to, you got to understand this term, venture secondaries. To put it simply, it's a market where investors can buy and sell pieces of late-stage private startups before they IPO. Think of it like getting early access to the hottest companies in the world. So what's Goldman's game plan? Well, first, they're buying a company called Industry Ventures, a huge player in that secondaries market. Then, they're going to fold its $7 billion in funds into their own massive alternatives platform. And the end goal? To give their high net worth clients a direct pipeline into the next big thing to come out of Silicon Valley.
I mean, this is a massive cultural shift for a firm like Goldman Sachs. They're stepping way outside of their traditional comfort zone on Wall Street and planting their flag right on Sand Hill Road, which is basically the symbolic heart of the entire venture capital universe. They're making it clear they're not just a Wall Street bank anymore.
So what's the bottom line here? Goldman isn't just investing in startups. With this move, they are positioning themselves to control the access to those startups. They're trying to become the ultimate gatekeeper for who gets a shot at chasing the next unicorn.
Okay, so we've looked at three really different companies making three really different bets on an AI-driven future. Let's tie this all together and figure out what it all means.
This table really sums it all up beautifully. You've got Galaxy Digital going from crypto mining to building the actual AI infrastructure. Then you have Klarna shifting from a human-led service to literally becoming an AI application. And finally, Goldman Sachs moving from public markets to buying their way into private innovation. Build, become, or buy. Three totally different survival strategies.
And that brings us to our final thought. In this crazy new era, maybe winning isn't about being the fastest or the biggest. Maybe it's about being willing to make the strangest, most unexpected move. The real question is, which one of these weird adaptations is actually going to work?